This is not financial advice, not legal advice, for entertainment, educational purposes only. Anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, double check you're still subscribed to the channel. Double check your notifications are on. And if you hit that like button, double check it's working properly. Because, you know, these bad actors are terrified of more people becoming aware of all the fraud and corruption in the United States stock market. Guys, listen. These bad actors, naked shorting AMC, GME, BINI, NWBO, GNS, and a whole lot of other stocks, they're in trouble. But the reverse repo went up to $25.395 billion, and they're saying they're trying to make it appear that the bank's liquidity is getting better. Let me tell you guys something. It was at $2.3 or $4 trillion 2 years ago. Okay, the banks are still in trouble, and because they get a tiny spike in the reverse repo does not mean that the liquidity is coming back. Okay, the banks are hanging on by their fingernails. That's why they're closing all the brick and mortar stores. And if the banks don't have money to keep their locations open, you know they don't have money to lend to the naked shorters who are naked shorting stocks in the United States stock market. And the SEC, the DOJ, the FBI is fully aware of it and does absolutely nothing about it. They practice willful blindness to the fraud and corruption because the majority of the victims of these crimes are retail investors, pension funds, and institutions that follow the rules. But here's the other thing. Just because the reverse repo goes up a little bit, it does not mean that the bank's liquidity increase, because you don't have to be a bank to park money in a reverse repo, okay? You got a lot of other entities that are not banks that park money there. If you have a large money market fund, you can park money in a reverse repo. So the banks might still be broke, but the money market fund might have a excess couple of billion, and that's why it went up to 25 billion. It does not mean that the banks have liquidity, okay? Government-sponsored enterprises like Fannie Mae, Freddie Mac, Federal Home Loan Banks, and these are not like Citibank or Wells Fargo or Bank of America. These are government entities. They park money there also, okay? And even some prime brokers and dealers are able to park money there, okay? And even large published cash pools park money there overnight. So just because we're seeing this spike, it does not mean that the bank's liquidity got better. It could be a whole lot of other entities besides the banks that are putting money in a reverse repo. And even if it was the banks, they went from 2.5 trillion to 25.396 billion or some shit. They're in trouble. They're in trouble. And don't let anybody fool you into thinking that they're not. Their liquidity is almost gone. And the thing is this, retail investors, we know what they're doing. We are a different breed of investors than we were 5 years ago. We are fully familiar with the fraud and corruption. We know exactly what's going on. We're notifying our regulatory agencies. We're notifying our law enforcement agencies. And we're filing lawsuits. So eventually, something's going to give. Either the liquidity is going to run out and they're going to be forced to start covering those naked short positions, or we get the case in front of a judge, it gets a discovery, and they're forced to start turning over that trading history, those blue sheets, and a whole lot of other information. And at that point, the SEC, the DOJ, the FBI won't be able to play willful blindness anymore, because the evidence is going to be right there for the entire world to see. Anyway, please leave some comments. Tell me what you think. Do you think the bank's liquidity is increasing? Anyway, have a great day. God bless. I appreciate y'all on this journey with me.